Good morning, everyone, and welcome back to your Daily 5. I'm Leslie Jouflas, and my website is Trading Live Online, where I teach pattern recognition and trading skills to traders. And today I am going to be talking about a comparison between the Nasdaq and the Dow Jones Industrial Indexes that's happening right now. I always try to have a current selection of charts. This is always a challenge where we have 5 charts and 10 minutes to talk about what we're seeing. So let's get right to it. As we know, the Nasdaq has been making new highs, continuing to make new highs until just very recently, and it's been leading the market since the lows in March. The Dow Jones Industrial Index has been lagging the Nasdaq from early March, and has been lagging the S&P 500 as well. And recently, it's really been gaining some strength in it, but we are getting very close to some important resistance areas in the Dow Jones Industrial. And the S&P 500, which we will also take a look at that chart this morning, just filled the gap area, and we're going to look at that as well. There might be some little flies in the ointment here that I'm seeing with the Nasdaq, and so I'd like to talk about that in comparison with the Dow Jones Industrial. So on this chart of the daily chart of the Dow Jones Industrial, and you can see on the left side here, I have marked in from where the February highs were. We can see where this divergence was on our RSI, was making lower highs as the price was making higher highs. As the market started the decline in February, there was a large gap down in all of the indexes, and it's marked in here on the Dow Jones. And over here, if we take a look now, we can just look back and we can see some areas that were consolidation, then breakout of that area, retest of it, and now, up to the upside. There was a gap area right here from early June that the market spent some time just sort of in a sideways testing mode, and then was able to finally break above those prices. And I'd like you to just notice that here we have a series of just up bars, 1, 2, 3, 4, 5, 6, 7 up bars here. And these bars are strong bars, a gap in here. But again, we have this area up here to contend with. The pattern that you're seeing on here is a combination of an A, a B, a C, a D, and also an extension where we're taking the length of this swing high to low and extending it up with a Fibonacci ratio of 1.27 and 1.618. And you can see that those are all sort of coming into the gap area. So with that in mind, let's take a quick look at the RSI, which has been rising. It's still below where the early June highs were. So we do want to keep an eye on this. But now let's go and take a look at the next chart, which is the Nasdaq. And the Nasdaq has a different picture to it. Now, the Dow Jones Industrial has 30 stocks in it, while the Nasdaq Composite has over 3,000 in it. So there's quite a difference there to keep in mind. So last Thursday, the market, here's that extension again, that 127. We're taking the length of this swing, projecting it up by a Fibonacci ratio 1.27, and the Nasdaq traded to that on Thursday. It looked like a strong bar, but the next day, Friday, we've reversed back down again. And if we take a look at the RSI here, back here in early June, the RSI actually just exceeded that February RSI high by just a bit. But here we're starting to see declines in the RSI and some weakness in the Nasdaq. So we don't have these two indexes moving in tandem. And I think that's something to really be keeping a close eye on. This parallel channel, you can go back and look up previous episodes of your Daily 5 and articles. I've talked about this parallel channel many, many times, but we keep popping out of it and coming back down into it. The center line being an important area to watch. You can see how it's held support recently, so we'll be watching that. So let's now move to our next chart. Let's take a look at some intraday charts where we might be able to get a good picture of the differences between these two indexes. So this is a 5-minute chart of the Dow Jones Industrials, and we're looking back here. I'm looking to just last Friday, and we can see that the market opened with a little bit of a gap down. It came back up and retested that previous closing day, and then was able to move above it with some strength. Then on Monday, yesterday, we've had a gap up, and notice how right here the Dow Jones Industrial was able to hold the lows for the day and continue to climb. But now let's take a look at the Nasdaq on a 5-minute. This is a 5-minute chart. So here is the day, this is Thursday, this is the day where the Nasdaq came up to that daily 127 extension that I showed you, and then it traded with a gap down, and the market retested that high, and then had a strong move to the downside. Let me just go back a chart again, as the Dow Jones Industrial was moving to the upside. So this is something where we do not, again, have both of these indexes moving in tandem. The Nasdaq had quite a weak day. It did present some nice, that's an ABCD sell pattern. That's a retracement type of a pattern, and then sold off and made another low from there. So the Nasdaq was continuing to show weakness as the Dow Jones Industrial showed some strength. So let's take a look at the S&P 500 now and see where we are with this. So this bar, we had the gap area back from February in the S&P 500, and the high of this bar, the bar that preceded the gap, was right about 33.68. And the market had poked above that in Globex, and then just off of the open this morning, the 33.96 and a half is the highs from February, so we want to be watching that as well. But notice the difference in the bars. Remember I showed you on the Dow Jones Industrials how we had some strong daily bars coming up. Well, the S&P is more, we have a lot of kind of dojis, smaller bars. We had this bar to the upside, and then started to form some dojis here. So it's going to be important to watch for confirmation of new highs. The S&P's got to get above this area here for all-time new highs. And so here's some things that you can watch. We want to watch the tests. We want to watch a test of the highs and the lows. So if the S&P can get back up close to this 33.96, does it come up to it and get what's called a failure? It just hits it and then totally fails to the downside, or is it just stalling around here? We want to watch advanced decliners is an excellent tool to use, and we want to watch the support areas with any testing to see if they're able to hold, and also previous gap areas. Now here's another chart that you can watch. I only get 5 charts, so I wasn't able to put this in, but interesting is NASDAQ was showing the weakness. Microsoft, which has been strong, was up at new highs, and it was at a point called do or die. I had talked about this last week in my weekly market setups on my website, that it was at a do or die point where it had traded up to a new high, and then it just went sideways for about 4 days. That was the do or die area, and now it's fallen to the downside, and it's right around a gap area that we need to watch for support. So the question is the Nasdaq still leading us, and it is turning first, or is it going to catch up with the Dow? And the recent highs it made Thursday and Friday are the very important highs to watch in the Nasdaq. So this is what I'm going to be watching over the next few days. So thanks for joining me today, and I look forward to talking with you again on the next Your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.